The day's business news for you now. We're going to start with the latest travel restrictions over the Omicron variant of Covid-19. Our business editor, Stephen Carroll, is joining us here on set to tell us a lot more about it. Stephen.
Japan's government is asking airlines to stop accepting new bookings for incoming flights from today. That's in addition to a travel ban on people who are living in 10 southern African states. Now, these are among the strictest travel restrictions being imposed in the wake of the discovery of Omicron, with quarantine measures also being beefed up in Japan. Travel companies across the world have seen their shares tumble in recent days as governments have been suspending flights and imposing travel bans on parts of the world. Air travellers to the United States now are facing tougher testing rules as well. They'll need to show a negative test done within 1 day of their arrival. Now, I've been speaking to Satya Anand from the hotel chain Marriott about how their business has been affected by restrictions on travel to southern Africa.
We always knew the recovery is going to be challenged as a result of mutations and new variants coming around. And this is no exception. And while it's too early to tell what the complete impact will be, we're hopeful that this will be a temporary nature as scientists find ways around it. But certainly it has impacted our hotels in South Africa as restrictions have been placed in that part of the world.
So are you seeing large numbers of cancellations?
We have not seen a huge number of cancellations as yet, but these are early days. I think people are waiting to see what is going to happen. They have learned from previous variants that it does take some time, and once they have greater visibility, which we're all hoping to get from scientists around the world, then we will be able to make those decisions and how can we travel safely in the future. And this includes the new variant that is out there.
Australia's economy contracted in the 3 months to the end of September due to the impact of lockdowns in some of the country's biggest cities. Spending on hotels, cafes and restaurants was down by a fifth between July and September, while spending on transport was down by 40%. Overall, the Australian economy shrank by 1.9% over that period. It is actually better than had been expected, though, increased exports helping to cushion the blow from those lockdowns. The economy is expected to recover in the last 3 months of the year, but you can see here these figures showing a very different trajectory for Australia's economy compared to other developed economies. Of course, they had seen a much bigger contraction last year, but growth this year has been much stronger as a result. Australia is still coping with the lingering effects of COVID-19 as its vaccination programme took a little bit longer to get underway than other countries. Moving on, the head of America's central bank has warned the risk of higher inflation lasting longer has increased. Jerome Powell says the Federal Reserve is prepared to speed up the process of ending stimulus to the economy to combat rising prices. Consumer price inflation in the US hit 6.2% in October. That's the highest in 30 years. But they're not alone. There are big inflation figures coming in from all over parts of the world. Here are some of the latest European figures that were published yesterday. Belgium, 7.1% price rises. Germany, 6%. The Eurozone as a whole, so all 19 countries, seeing 4.9% inflation. That's the highest since 1997. France seeing 3.4% inflation, which is lower than the average across the Eurozone, but it's the highest in 10 years here as well. Let's hear more now from the chair of the Federal Reserve about this issue.
The threat of persistently higher inflation has grown. I think my baseline expectation is still, as I mentioned, and of most forecasters, is still that inflation will move back down over the course of next year, closer to our target. But clearly the risk of more persistent inflation has risen. And I think what you've seen is you've seen our policy adapt, and you'll see it continue to adapt. You know, we will use our tools to make sure that higher inflation does not become entrenched.
Now, those comments had sent shares on Wall Street tumbling on Tuesday. In fact, it was a day of sell-offs on Tuesday. Let's have a look at how European markets have opened today. We are seeing a bit of a rally after yesterday's falls. Gains across London, Paris and Frankfurt. Their oil companies are actually doing quite well today, and that's due to a rise in oil prices. In trading in Asia, we had a vaguely similar picture. Gains across most of the main Asian markets in trading today as well. The Nikkei in Tokyo closing before that announcement came from the Japanese government about incoming flights. We haven't got reaction on Japanese airlines, but gains, as you can see, across the board. The Kospi and Seoul up by over 2%. Finally, for me, Twitter is to stop sharing private photos and videos without their owner's permission on their platform. From today, people can ask for posts to be taken down if they contain media which belongs to them and wasn't public. This is part of an effort to prevent what's called doxing, which is where private information is published online in an effort to damage a person. Twitter now was already doing this in certain parts of the world, but it's been extended to all of its users around the globe, although experts say the policy is so broadly written that it could be difficult to enforce. Stuart.
Yeah, very difficult to track down, I would have thought. Thanks very much, Stephen. Stephen with Business on France 24.